Also, it's going to complicate our system when we get into the bank feeds over here. So if we go into bank feeds, note that like in an ideal scenario, you would just pay your employees like you would any other vendor, and you would just say, I'm gonna pay you an electronic transfer, maybe wait till it clears the bank, and then just record it when it clears the bank. But you can't do that with bank feeds if you're processing payroll within QuickBooks, because you have to process the payroll check before it goes through the bank feeds, because there's this accrual component which is going to put the withholdings on the books as a liability. So it's going to mess up our automation process to be on a cash-based system. All right, what's your other option? It's possible, possibly, to still be on a cash-based system, but pick up clients with payroll if you have a good network. How would that work? Well, you could say, hey, look, I'm not going to buy payroll in QuickBooks, but I'm going to work with a payroll provider outside of QuickBooks that deals with the payroll. They're going to process all the payroll within their system, and they're going to deal with the payroll check stubs that they have to give out. They're going to deal with any laws and regulations for whatever and so on, possibly helping with human resources. They're going to do the 941s, the 940, and the W-2s and the W-3s and all that stuff. And then they'll pay the employees and pay the liabilities. And after they pay them, maybe I just wait till they clear the bank, right? I could just wait till they clear the bank and record all of those on a cash-based system as the bookkeeper, as say payroll expense. And then at the end of the year, I'm going to work with a CPA firm or accountant. You need someone that's somewhat sophisticated that can deal with the shoring up of the payroll. And I'm going to give them and say, hey, look, I've been recording payroll just on a cash-based system as I pay it. The payroll provider helped us to generate payroll, and they have given us the 941s, the 940, the W-2s, the W-3s. Here is that information. Here's the QuickBooks file. What I would like you to do for tax preparation purposes is make any period end adjustments that need to be made to put the proper payroll liability on the book, to break out the payroll taxes versus payroll expenses if needed for tax preparation, and to make sure that what we're reporting on the income taxes for our business, possibly on a Schedule C or other kind of tax return, ties into what was reported by the payroll provider with the W-2s, the W-3s, and the 940s and the 941s. Because remember, the IRS has both. I mean, the government at least has both of those things. They have what you gave them for the W-2s that you pay the employees, and they have your Schedule C or whatever your income tax reporting is for the business. So whatever you expensed for wages, you should be able to reconcile to the wages calculation and payroll taxes for that you pay the employees and reported on the W-2s, the 940s and 941s. If you can't do that, then in an audit you could be in trouble, right? So you tell the CPA firm, reconcile those, make any period end adjustments we need to do, and that, although it needs a system, a network to do, could work quite well, because then everybody can do their own thing. You can do things on a bookkeeping automated. You could still take on clients that deal with payroll. You can work with the payroll provider that deals with all the headaches of the payroll, that doesn't muddy up the QuickBooks system and force us into an accrual thing. And you have your CPA firm or tax preparer that knows how payroll works. Many tax preparers may not, unless they have to study. That's somewhat of a but they can shore up at the end of the year, making sure that you break out the proper adjusting entries for payroll at year end and showing everything to reconcile properly so that you are ready in the event of an audit to defend yourself. So that's the general idea.